Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I've got a lender that has cut rates on 24 of their products. They've got sub 4% mortgages now on residential, on remortgages and on buy-to-let, which is really positive news. The mortgage price war is really heating up at the moment, and that's down to a few things. One, the market's slower, so they're fighting to get your business. They're being more competitive because things have slowed down sharply. And two, we have got pretty much 100% chance that the Bank of England is going to cut mortgage rates next week on the 8th of May. So in this video, I'm going to go into all the details, give you all the rates and all the information you need. If you're new around here and you haven't done already, please do subscribe to the channel over there and hit that bell notification. We've got new property content every single day. Yesterday, we talked about the Home Office asking landlords to bail them out. You can check that one out. And this morning, we talked about the volume of landlords quitting the market, so make sure you check that. That's a reason to subscribe. And let's get some more views on this video by smashing like, tickling like, doing something to the like button. That helps with the YouTube algorithm and really helps the channel grow, so thanks to everyone that does that. So who are we talking about? HSBC. Now these guys did cut some rates last week as well, and they've rolled out more, and this is really good because we're seeing a number of lenders now just starting to get below that 4% mark. And hopefully what we'll see is that once the Bank of England cut next week, maybe we'll get a little bit more as well. I think by the summer, you could be looking at 3.75% mortgages, and by the end of the year, 3.5% mortgages. So we're definitely moving in the right direction. So basically, HSBC have cut a number of their products by up to 0.4%. So 0.25%. That's what we're expecting the Bank of England to cut as well. And that's what we're seeing a lot of lenders doing as well. Now, these, as I said, cover a wide variety of products. In fact, 24 different products that HSBC have, which is really good. So it will cover residential, remortgages, first-time buyers, and buy-to-let. So let's have a look at a few of their deals. So one deal, which is worth looking at, it's not that expensive to get, is if you get a Premier account with HSBC. And if you get that, you can really get that to work for you by getting better rates on stuff like mortgages, better rates on credit cards. You get things like your phone insurance included, and you get travel insurance and stuff like that. So it is worth looking into getting the Premier account. Now, the rate is now the market leading rate, and that is 3.88%, which is good. That's on a 2-year deal, which is good as well. So you're not locked in for a long period of time if you believe rates are going to carry on dropping. And the loan to value on this, they will give you up to 60% loan to value. So that means you need a 40% deposit or 40% equity. Not the best for first time buyers, but a lot of people do have that. Most of the market has at least 40% equity in their property. So really good news there. And the fees aren't too bad either. £999. Now, look, it's not cashback. It's not £100 fees. It's better, though, than it was a year and a half ago, where you could get some fees that were like 6%. I saw in some horrendous cases. So a Premier account, go and check that out. For non-Premier accounts, what can you do? Still a good rate here as well. So those of you that don't have a Premier account, the rate is slightly higher at 3.91%. Still well below that 4%, which is really good. That's on another 2-year deal. And again, 60% loan to value. And the fees on that one are £999 as well. So decent product fees there. Decent mortgages, I'd say. I'd say they're definitely worth one to consider. I've got a buy-to-let one I want to talk to you about as well. But what I do want to say, just in case you haven't watched this channel for a long time or you've missed this, is Right now, lenders are fighting over your business. They are looking to cut rates to entice you in, to get you in. Now, you can extend your mortgage or get a new mortgage agreed in principle about 6 months out with most lenders. Some have cut that down to around 12 weeks, but a lot of them have that 6-month clause as well. So what does that mean? Well, that means if you look at one of these rates and you're thinking, well, I don't actually get a new mortgage until the end of the summer, you can go to HSBC now, get your deal agreed in principle, and that locks you in that rate. So you could agree the rate at 3.88%. Then if things went wrong and inflation surged back and interest rates went up, you've got your worst case scenario. But if in that period of time the economy goes really bad and everything starts to drop and the rates go down to 2.5% or something crazy like that, because you haven't started that new deal, you can swap onto that as well. So that is something that's really important to understand. A lot of people don't know that. Let people know that. Maybe you know someone that is remortgaging. That's a reason to share this video, WhatsApp it, email it, or Facebook it to them so they understand how it works. Let's look at the buy-to-let stuff that they've got here. And so buy-to-let mortgages, these are in your personal name, not limited companies. If you want in a limited company, you need to look at a specialist lender like Lambay. And the buy-to-let, they have a deal here. The rate is 3.91%, so same as the non-premier as well. It's a 2-year deal, 60% loan to value, not the 75 loan to value that some people want on a buy-to-let. If you do want 75% loan to value or even 80% loan to value, they have deals on that, but the rates are going to be obviously higher. Now, here's where this one does have a kicker on this one, and that's the fees. And the fees on this one are £3,000, yes, £3,999. That's high, but not so bad if you've got a big deal. If you're doing a 500 grand deal, it's not too bad. If you're doing a 50 grand deal up north, it's probably not the best rate for you. So you've got to take all of that into account when shopping around. Now, some of these deals do really help buy-to-let, because on buy-to-let, it's vital that the payments stack up, that the deal stacks up. If it doesn't, the lender won't lend to you, and it's all based off your monthly payments outside of the fees. So this could mean that your deal stacks up on paper at the 3.91%, and then you can put those fees onto the balance and maybe go for a 5-year deal on this rather than the 2-year deal. And then that isn't such a bad thing in that scenario. So hopefully that makes sense. But look, HSBC, a big lender, maybe you're with them already and it could be something you could easily swap onto. Or maybe you are a Premier account holder. That will speed things up as well. I think it's worth looking at. And we've got other lenders that are cutting rates this week as well. So this is good. This is what we want. But sadly, it does mean that the economy and the outlook probably isn't as great as maybe it could have been if we didn't have all this trade war and uncertainty and Labour putting up minimum wage and all sorts of things going on. Anyway, let me know, is there any other lenders that we should be checking out? Interestingly, I've got a video coming up that talks about how mortgage holders like you, a lot of people now believe that interest rates are going to go up. Hence, this could be a good deal to grab onto. Have a look out for that video. Do smash like, do subscribe, do check out all the other content as well on the channel, including this video right here.